Good morning, good afternoon, or good evening, depending even where you are on the planet. And welcome to today's Bull versus Bear webinar on today, TGI. Thank God it's Friday, the 21st of April. 2023. Steve Miley here on the call for Trade Day. Welcome, everyone. I'm going to go through our usual regular run through in here today. Calendars, what we've had, what we've got coming up, both the macro and micro calendar, the big data, the earnings data as well. We'll take a look at some articles from the major news wires, taking a look at the macroeconomic, the fundamental, the geopolitical events that are shaping markets right here, right now. We'll look at the Fed Watch tool as ever, run through that. And then we'll take a look at the charts and see what's maybe interesting on the charts. So first of all, let's have a look at 5 things you need to start your day. I'm also going to run through this this Bloomberg Open American edition, which I think you can sign up. I think you only get that free if you are signed up to Bloomberg, but we'll run through that as well. So first of all, Tesla having cut prices 6 times this year, and then after they announced earnings 2 days ago, which are kind of mixed, but then they were must then also said they would continue to cut prices. They actually then increased prices on their higher end models today. Just the day after he said they would continue cutting. So, but they've been cutting prices on the Model 3 and the Y, but they jacked prices up on the S and the X a day after they said they wouldn't. And Tesla shares were down like 10% on Thursday after Musk said that. So, and they've cut prices 6 times this year on the range. So, I mean, I don't know. So whatever. There's another article in here. Look, Tesla hikes US prices days after 6 price cuts. So they cut prices again back on a couple of days ago, and now they're hiking prices on Thursday, but 20% lower than where they were on the S and the X series at the beginning of the year. Nevertheless, so all sorts of things going on there. And Tesla did drag us down. It was part of the reason we were down. They announced that Wednesday after the bell, and then pulled the Nasdaq down yesterday. The Tesla moved lower, and then the Nasdaq in turn tugging the broader indices down as well. What else we have in here? Despite concerns voiced Wednesday from John Williams, Goldman Sachs is bullish on US credit. I mean, nothing really significant there. China, US relations deteriorating, not really impacting markets. Biden to sign an executive order to limit investment into China. Markets little changed. Quiet day. PMI from S&P Global is the main focus at 10:45 Eastern. Let's go and have a look at one and done. There's not much difference in here. Fed officials last night. I mean, I don't think they were. I think they were mixed. I mean, you would actually have to say they were potentially slightly dovish rather than hawkish. So we had Harker, Bostic, and Mester. Mester is more of a hawk in here. More noted prudence is needed amid tighter credit conditions. So Mester said that. Harker said rates close to where they need to be. Bostic back to one and done approach. So, and that's what the market's telling us. That's what the Fed tool's telling us. Let's jump from here to that. And so, there's your one. So now 85% chance, pretty much been sitting around here anyway on the one more hike in May. Then June, if we look, still saying the same. July, staying the same. And then September, kind of mixed between whether we cut or whether we stay the same. But then by November, the market definitely wants a cut. Okay, looking for a cut, maybe 2. Okay, not much difference between 1 cut and 2 lower by, so a half point potentially, not necessarily 2 cuts, but a half point maybe for the first cut, and then December maybe even either another second cut if we have a 25, and maybe even 3 here by maybe a half and a 25. I don't know, but the market is certainly more dovish at the back end of the year than the Fed are, and where the Fed meet and where the market and the Fed meet is going to be all important for the path of obviously, for the path of stocks going forward, and as the data comes through, as we go into the deeper into, or as we go into the second quarter. So Tesla hiking, article on that. US prices, we've already spoken about that. Let's look back at the earnings in here we had from, if I go back to yesterday, obviously the Tesla announcements weighing over yesterday. Yesterday's earnings were mixed. But for some of the big players in here, Philip Morris, AT&T, not really impacting massively on the major indices, even though. And if we go into today, what we got, Procter and Gamble already out positive, HCA, Schlumberger in here all positive. So nothing really massive in here. Signature Bank's going to be interesting. We'll see what that looks like, but I mean, not going to impact the markets. And on the macro side, in here, we've had some negative data from the UK this morning on the retail sales side. We've also had this flash PMI. Now, remember, for the US, let's just talk a little bit about PMI. I'm going to spend a few minutes talking about PMI. The main PMI data for the US is the ISM, the Institute of Supply Management data. It comes out, generally speaking, on the first of the month, unless the first of the month falls on the weekend, and it comes out on the first day after that, which will be a Monday, right? So that's generally speaking when we get the PMI data from the ISM, the Institute of Supply Management for the US. However, we also have S&P Global now. It used to be Markit, M-A-R-K-I-T, now owned by S&P Global, produced their PMI data, which is for global economies, okay, and for many, many countries. They do it for, I don't know, something like 60, 70, 80 countries doing the PMI data, okay, and they produce what we call flash PMI, okay. You can see the little P in here. Little P here, P. So that's P for preliminary, also known as flash PMI. So it's an early indication. This, remember, is data for April. We're only on the 21st of April today, okay? But they put it out approximately, usually about a week early. And that data comes out. Usually I think on their site, well, when it used to be Market, they used to collect about 80% of the data on average. They have about 80%. So 80% of remember, it's survey data. So it's survey data. These are surveys of purchasing managers in corporations, in service sectors, in manufacturing sector, looking up and down the supply chain. How is their company doing? What is the outlook for their company? What is their outlook for their sector? What is the outlook for their sales? What is the outlook for their revenues? What is the outlook for their profits? What, yada, 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 yada. Okay, so this survey in here gives us the PMI data, and this is flash PMI. So they've got most of the, a lot of the time, the final PMI data is not far off the flash PMI data because they've got most of the surveys in anyway. So it's important data. We don't get it from the ISM. So on PMI day, when we get it from the ISM, we also get the S&P Global data. They're released on the same day. The S&P Global data for the US is released 15 minutes before the ISM data. Okay, so the PMI data comes out at 9:45 Eastern from S&P Global, and then on the final day, on usually the first of the month, and then the ISM data comes out at 15 minutes later at 10 a.m. And usually the S&P Global data, I've got to get to my point in a minute. The S&P Global data doesn't usually move markets very much when it's the final data, because then 15 minutes later we get the ISM data, which is in the US, is seen as more important. It's seen as a stream of data that's been going longer, I think, than the S&P Global data. So it's seen as more important, and the market doesn't often move on the S&P Global data. It used to be Market data, and it moves on the waits for the ISM data. However, we don't get the ISM data on the flash side, on the preliminary data. So it's a long way of saying it is important today, even though it's not important when we get the final data, because then we get the ISM data. Today we don't get the ISM data, so this is going to be important. It is important, and it is pretty accurate as well. So we've had it from Europe, not the Eurozone, from Europe this morning. You can see in here French. Generally speaking, what we've seen in here is manufacturing has been worse than expected, and the service sector has been better than expected, and let's put the composite usually about more positive. So in here you see French, manufacturing worse, service sector better. German, manufacturing worse, service sector better. In Eurozone as a whole, manufacturing worse, Eurozone better, composite better. UK, manufacturing worse, service sector better, composite better. Okay, the composite obviously being the amalgamation, the totaling of the service and the manufacturing. So kind of mixed in here, but overall probably seen it as slightly positive data so far through from PMI data. We do get that from, as I say, the flash PMI data from S&P Global for the US at 9:45 Eastern today. If you do trade, not many of you do, but if you do trade currencies, watching out in 50 minutes time, retail sales data out of Canada, in case you want to trade the Canadian dollar. The rest of the day is fairly quiet. We have some ECB, European Central Bank speakers in here today, nothing from Fed speakers. So it's fairly quiet after we get the 9:45 data. Looking onto the earnings calendar in here, we've had these already. Nothing really much is going to worry us now for the rest of today. So where are we going into today? Well, US futures are slightly lower. They were lower yesterday, tugged down a little bit lower in here. European stocks in here this morning, fairly flat. DAX is down 0.3, but the FTSE is up about 1/10. The CAC, the French index, down about 1/10. And US futures in here having got tugged lower preliminary by Tesla and NASDAQ yesterday, putting them broader indices lower. We're down about 1/10 and 2/10 on the Dow and the S&P and 4/10 on the NASDAQ this morning. One quick article I just want to I'm going to throw it into the chat in here. You can have a look at it at your leisure. Just think it's interesting. And obviously this is a bit longer term, but basically saying that the fundamentals looking negative for US stocks. If we look at earnings data, if we look at potentially recessionary pressures that are going to be coming through because of the interest rate hikes, because of potentially credit issues, because of the mini financial crisis we had in March, all of that puts the macro data, and then the earnings data has kind of been mixed, and potential future earnings data is going to be negative because of the weight of the interest rate cuts we've had and potential recession. The Fed now potentially expecting recession. So the fundamentals stack up kind of negative, but the technicals still remain positive. I'm a technical analyst. They still look fairly positive in here to me. And we'll take a look at the chart. So this article just looking, and obviously this is a little bit longer term outlook, and we're day trading at trade day, but I think it's just good to have that kind of backdrop and have a feeling about, how we're approaching markets in here. And one other thing for you oil guys in here was that we had sell off earlier this week, further down yesterday, kind of a dip and a bounce in here on oil this morning. But basically, we had that big jack higher in oil that we saw. I'm just going to actually jump to I'll go and take a look at the oil chart quickly while we're talking about it. But we had that jump at the beginning of the month on oil on the back of, let me just load up the right chart in here. An old oil chart there. In here, I'm going to go to so you can see in oil, there's that jump higher, boom. We saw when we had the oil OPEC, the OPEC announced their cuts in here, back in here right at the beginning of April in here, and you can see the market nearly closed that gap, sold off on Wednesday and then Thursday, kind of a slight rebound from just above that gap in here, but that gap goes down to where's the top in here on the June contract, the high, I can't see it because of this in here. Let me say, actually, I'm going to flip it to a daily chart. It'll be easier to see in here. So, sorry. So in here, the peak on before we got the oil price cuts was 75.83. So we're holding above that and trying to bounce now, but real risk potentially for that gap to be closed. Right. Let's just quickly go to actually I've run through this already, right? The Fed, what we're expecting in here. We've already done the Fed. So let's go to the charts for the S&P and for the NASDAQ. Actually, starting on the S&P. On the daily chart, and you see the market kind of tug lower in here. We are flirting with pushing below, okay, this trend line in here. I need to just pull that back across, that trend line there. Got down below that yesterday and bounced back below it this morning, and looks sitting right on that 13-period exponential moving average. It's a little bit of an important day maybe going for next week going into today. I'm thinking if we can close below that 13-period exponential moving average, the setup for next week is kind of quite negative. But I wouldn't be surprised to see, as we have done previously, dips down to and bounces from this look in here, 13-period exponential moving average. And we're sitting basically right on that right now. Where we're trading right now is right on that. It's around 41.45. It comes in, okay, that 13-period EMA. If we start to push decisively below yesterday's low, then we could see a move down to this important low here and these lows over here. I'm going to talk about those shortly, okay? And also I'm going to take a look at this on the NASDAQ. But yeah, I think that 13 period, the market has avoided a close rate. I wouldn't be surprised to see this bounce back up into the range. And if we go to the 15-minute chart in here, importantly, let me get rid of all this old stuff. I think the NASDAQ's probably more important in here at the moment as the driver. So we kind of taken out these previous lows here and here, and it kind of threatens a top. You could argue this is like head and shoulders. So shoulder, shoulder, head. And you could argue double shoulder over here. Shoulder, 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 shoulder over here. Double shoulder, head, double shoulder, or just head and a single shoulder. And we're broken like through the neckline here. If you argue that this is the neckline for the one shoulder, but then if you've got double shoulder, you could argue then the neckline runs across here, right? And we're basically held like here now a couple of times. And then the market has gone back down. So we've gone down to that low. There was 41.38, and then this is in here from yesterday. We got to bang, held it exactly, okay, and then overnight dipped down towards it, rebounded again, dipped down towards it, and rebounding now from it. I think 41.38 is important, okay, and we said 45 is the EMA, right? So I think if we take out 38, it could have a go down at these lows over here, 41. Kind of the 41.17 to 41.10 area, okay, if it takes out 38 in the real market. So when I buy a real market, I'm not saying this is not the real market, but when the cash market opens, okay, so watching out for that. If it does take out that, we could see an acceleration there, but wouldn't be surprised to see an acceleration there and then a bounce into the close to get back above that 13 period exponential moving average. So that's the line in the sand. 41.38 is going to be important going into the day. Down through 41.38 rushes us down to here, but then we could see it try and get back above that 13 period EMA. Let's go and look at kind of similar on the NASDAQ. Now, and the NASDAQ, interestingly, is already, it's been flirting a lot with this EMA. It actually closed below that EMA a week ago or so, over a week ago, and then got back above it. So it kind of neutralized the EMA now. But you've got this kind of sideways choppiness in here and lower again in here this morning for the NASDAQ. But if we go in here on the NASDAQ, so now you've got on the NASDAQ, it's not the same kind of topping pattern, but it's certainly a topping pattern. You've got like arguably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 failures in here on the NASDAQ between 13,200. Okay, so it's kind of a big range in here up to like 13,350. Okay, 14 failures have gone up there and failed. And then look at all the times it's come down here, down into this zone, okay, down into this zone, and then rebounded, but now we're bound back below there. But we've only gone into this zone now and then holding above. I mean, that is just super critical. You've got 2 points in here, right? So you look at this low in here, which is close to this low and this low. So you've got this area here between, on the downside, 12,966 and down to like 12,952. And then the actual low down there at 12,925.5. Okay, that's all going to be super critical. But you can see the market, how as much as it's reluctant to take out this big resistance zone between 200 and 350, right, or 200 and 300, it's also reluctant to significantly, it has broken down below this support here, like 13,075 to 055, but then no acceleration. Look, broke below, bounce, broke below, bounce, broke below this morning and bouncing again. It doesn't want to go and attack this support down here. So I think it's going to be a super interesting. I mean, I've got no strong, I'm still, my view is it doesn't want to make, why is it going to make a statement today? Unless we get something out, we've got nothing really. We've got the PMI data might drive it. For me, I think all the risk is mean reversion in here, right? And mean reversion puts us back up towards like 13,100, 13,100, maybe 150, back up into the range. That's been my view. If it starts to break, though, then it could easily attack that. And if it attacks that low, then it could be a much, much bigger sell-off. I don't think we'll see that today. The market's been in consolidation, kind of range, mean reversion mode. I think we stay into that. We've got no new big news coming now for the rest of the day. The PMI could be a trigger, but for me, I think it's mean reversion back up into here. So staying slightly positive into today from where we are now. All right, I'm going to wrap it up there, guys. Any questions? If not, no questions. All right, I'm going to wrap it up. I'm going to wish you all a great trading day. Take care, stay safe. Have a great weekend too. We'll be back with another bull versus bear webinar on Monday. Bye.